Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video, I'd like to look at how the US E-minis unfolded yesterday, which was Monday the 4th of November. Let's start off with the 3-minute ES. For standard MTPredictor traders, it was a good day. You can see the STF was blue, stroke black, and then blue for the rest of the day. Blue means an uptrend, so that would have avoided this sell signal here, and also avoided this sell signal here. This first trade set up here would have resulted in just being taken in by one tick, just being taken out by one tick, so very frustrating. But this does happen with trading. However, the loss was kept small and under control. After that, we then had a second long trade here, which was off the low of the day. The market then rallied up, and you would have taken profits at this level here because the STF was still weak for a nice 3-hour profit, which was pretty much the high of the day. So you had a trade from the long, from the low of the day pretty much, to take profit at the high of the day pretty much. But the main thing is this profit was 3 times greater than the initial risk. So even though you had a losing trade here, this is what we call -1R, our one risk unit. This profit at 3R, 3 times greater, would have meant you'd have had profit overall of +2R. The YM, there's the STF. The STF was blue here and allowed you to take a long trade off what was the low of the day there. The market rallied for the rest of the day and would have resulted in a nice 3-hour profit later on. The NQ had a couple of attempts. There was a TS1 buy setup here that didn't quite reach the first target. But with the profit at, well, almost the target, 1.5R, you'd have probably brought your stop to break even. If not, this would have been a -1R. There was another attempt at a long trade here that would have just taken you in and just clipped you out for another -1R loss. So let's say if the worst case scenario you were -2R down. Here's a TS4 buy setup that would have then come up to the first target there for a nice 3.3R. Again, a good example of how the profit's much larger than the losses. So even if you had 2 losing trades there, that would have totaled -2R, but then +3R overall. Sorry, +3R at the end of that particular trade would have made a profit of about 1.5R overall. So a good day. The only tricky thing was these sell setups here, particularly when you take a look at the larger degree trend, and this is what I particularly was looking at in yesterday's webinar. Because if I go to the 15-minute chart, you can see we had a 15-minute resistance here, and I was anticipating that the larger degree trend would be down. Same with the YM. There's the 15-minute resistance, therefore the larger degree trend will be down. So in particular on the YM, I would have been very tempted to actually say to take some of these short trades. In fact, actually in the webinar yesterday, at the time, I was suggesting that these long trades were ones that you shouldn't really be considering because they were against the trend. Now this happens with trading sometimes, and it's sometimes very easy to go back in hindsight and say, oh, well, if we'd looked at it a different way. Now the day before, we had a marvellous trade off the very low of the day here, which was not only at 15-minute support, but it was also at the end of a 5-wave sequence, and all in all was a very nice trade here up into the close of the day for where's the close of the day there, for a couple of hour profit. So there were some very nice trades on the day before on the ES, and it's no surprise at all that yesterday would have been a harder day. So let's just clear this all off. So what could you have done if you'd have missed this long setup here because you thought the large degree trend was down, and then you started to take some of these sell signals here because again you thought the large degree trend was down? Well, what you should have done is as the day progressed, you should be following all 4 USE minis. So let's say you avoided this. Let's say you took a -1R loss there. Let's say you took another -1R loss there, and it was fairly apparent that the market was not going in the way that you anticipated. In other words, not going as the large degree trend would have dictated and down. Then basically as the market basically proved that it wasn't going in the way you anticipated, then you should have considered this long trade here on the NQ for at the very least putting in a potential 3-hour profit, for at very least perhaps bringing you back to about break even for the day. And this happens when trading, particularly when we've had some good a few days ago, as I outlined on the ES a couple of minutes ago, and also we had a lovely VSA trade setup here that I was looking at in the trading webinar yesterday. Here's our volume VSA spike. That was our low coming in on the NQ yesterday. Our target would have been here, and particularly on the NQ, this is what I was talking about yesterday, that would have been a very nice 3-hour profit off the low of the day on Friday. So when you've come off the back of some good trades, it's no surprise at all that you have a couple of bad days or some harder days, and this is what I call the cyclical nature of trading. So this is a good video to do because it comes on the back of a few good days, so we're actually having to talk about a hard day, and this is a good fact that basically the markets do have hard days. You do the best analysis you can. You do you identify the large degree trend, as you can see the day before or the last couple of days beforehand. If I put the session breaks on, you can see that these DPs caught the previous highs and lows on the 15-minute chart absolutely perfectly. So after working so well, it's no surprise that that they decided that actually they're not going to work so well yesterday, and this is just a fact of trading. It happens. So the whole point of this video is, even though you have a good idea of the large degree trend, sometimes you'll just have losing trades. It is as simple as that. But the trick is to, first of all, keep the losses small. So here I'm suggesting that even if you did take these losing trades, the losses will be kept small at -1R. Then as the day progresses, if it is apparent that the market is not going in the way you suggest, and then you get a trade set up in the opposite direction, particularly when it's with the standard STF color like this, then you can probably recoup some of your losing trades, just as I've suggested here, with a nice profit later on in the NQ. So a very hard day yesterday for the MTPredictor trade setups, and I think that's why it's very good to do a video like this on a day that is hard, but to show you that even though you can have a hard day and you can basically get a market that moves in the opposite direction to which you anticipate, in other words, your anticipated large degree trend is wrong, you can probably get some setups that will possibly put you back to break even a bit later in the day. So all in all, a hard day yesterday, but again, as I said earlier, it comes on the back of some very nice trades at the end of last week. And that is really the trick of trading. The trick of trading is not having profits every day. It's about controlling your losses, or trying to keep your trades down to at least break even, or at the very least some small losses on days that don't anticipate as or unfold as anticipated. So trading is more about risk control rather than making profits. Profits tend to come easily when you have some good clear patterns. The trick to making money overall is on the bad or hard days, keeping the losses small, and this is what we do with MTPredictor with our position sizing and our automatic setups as we have here.